Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to give you an end of the week update on the dividend portfolio. Here we're going to update some positions on trackyourdividends.com, and then we're going to go through Sharesight to show you the performance up to this year. And yeah, that's pretty much it. But if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So we'll go through the portfolio real quick here. Balance closing out at $10,190.85. We are up $101.17, up 1% on the day. For the 1 week, we are up $124.08, up 1.23%. For the 1 month, we are up $555.69, up 5.77%. For 3 months, we are up $1,301.11, up 14.64%. For the 1 year, we are up $2,061.59, up 25.36%. And for the all, we are up $2,388.16, up 30.61%. So we did purchase a new position here, and that is Bell Canada, ticker symbol BCE or BCE Inc., closing out today at $66.45. It holds about 9.15% of the portfolio, holds about 14 shares of this. Total return today was $3.24, and our total return is $91.37, up 10.89% since starting this portfolio. The two positions we bought are here, 2 shares at $66.45, totaling $132.90. That was the first one. The next one, as we know, every single week, every time we make a purchase of a regular stock, we will add $25 to VFV, which is the broad index fund for the S&P 500, non-Canadian hedged, non-hedged, but a Canadian currency. So it's weird because we're negative 12,448%, but that's probably incorrect because the fractional shares might be a bit off there. But we did purchase $25 worth today, and that got us 0.2417 of a share. And we are currently down 22 cents on this one, down 0.44%. And we don't even own half a share yet. So we will continue to do that, and we'll talk about what the market is doing as well today. So with all that being said, we will head over to trackyourdividends.com to give you the breakdown of what's going on over here. And the portfolio last week was $9,958, up 2,446. Dividend yield last week was today was 3.1% if it closed today. Yield on cost for us is 4.11%. We are a full 1% above the yield if you to build this whole portfolio as it stands today. Annual income of $308. We had 12 shares of BCE, but we're going to change that. So we'll go ahead and add a new holding. And the ticker symbol for Bell Canada is BCE.TO. And there it is. We bought 2 shares of this at a price of $66.45. Go ahead and add that. And we're also going to update VFV as well. Add the holding. Ticker symbol that is VFV.TO. Vanguard S&P 500. And we purchased a total amount of 0.2417 of shares, and cost per share was $103.42. Go ahead and add that holding. Dividend yield today, if you build it today, 3.12% with the updated positions here. Yield on cost for us is 4.12%. Annual income comes in at a whopping $316. So BCE will give us an annual income of $49. Our yield on cost is 5.84%. This is broken up into quarterly. So break this up into 4, and you'll get your quarterly dividend on that. This is for annual only. If we head down to Vanguard S&P 500 Index ETF, we now have 0.48 of a share. Current closing price was $103.81. Our average cost of getting is $104.26. And we get 54 cents per year from that one. And so that is trackyourdividends.com. We will now head over to Sharesight, which is over here. And in this calendar year, I already updated this position, BCE and VFV. Capital gains of 3.55%. Dividends, we've received 0.10%, and currency gain. This is the currency fluctuation because we have two American companies in here, Qualcomm and Cisco Systems Inc., which gives us a total return this year from January 1 to today. As you can see here, January 1 to today is 3.49%. Not bad. Not bad at all. Considering, I'll back to track your, actually, Wealthsimple. Considering that the market is really volatile and you've seen maybe a slaughter in your growth sector or growth positions that you own. And I just want people to understand that the market is very reactive. And if you believe in the companies that you own that are maybe heavy on the growth side, maybe are still quite young, and I know a lot of companies are not that young that maybe you're invested in. For example, PayPal, an all-time low today. Square, or also known as Block now, has hit 52-week lows. And I've got a bunch of notifications from that because I own a few of those positions, and they've all hit 52-week lows. But that's okay because there were some that hit 52-week highs as well, and I do believe it was BMO, which is Bank of Montreal. This is not financial advice, of course. This is just for entertainment purposes. For me, I'm not going to sell off any of my positions only because I truly believe in those growth companies. And I know some people are still new to investing, and new to building a portfolio, and they haven't seen things like this before and are experiencing it now. And it's not a sign to panic because, to be honest, every single market year this happens. It doesn't happen, but the market just reacts to any kind of news that comes out, whether good or bad. It does react. And so right now there is just a real slaughter happening on the growth sector, not growth sector, but growth stocks. And so with that being said, you want to look for value-based stocks that have consistent cash flow. And why is cash flow so important to companies is the fact that because we're building a dividend portfolio, or if you're building a dividend portfolio, the companies that you're invested in probably want to, or you probably want them to produce cash flow so they can pay you out your dividends, and so you can reinvest those dividends. There are deals out there right now. If you are looking at growth stocks or whatever it may be, something that can produce huge amounts of growth for your capital, make sure you believe in the company. Don't think that you're going to become super filthy, stinking rich just from investing in a speculative stock. And really do your due diligence. And when I'm talking about due diligence, I'm talking do your research in the company, figure out where their profits are coming from, and really analyze, is it worth that price? Start learning. This is a good time to learn. Don't take those L's as losses, take them as learning opportunities. And this will really just increase your knowledge among investing, among stocks, among companies. And that's just really beneficial, in my opinion. If you're investing, please do not invest like you're gambling. Invest like this is your future, like this is a company, a business, because just as quickly as it rises, it can fall, and it's not fun that way. You don't want to, really just turn off your learning capabilities of wanting to invest or investing. You really just want to keep on going and holding for the long term, because this is not a short-term game at all. It's a long-term game, and it's kind of like a marathon. And so maybe if you're feeling the pain right now with having a lot in sectors that are highly speculative or dependent on huge amounts of growth, then you maybe should reconsider maybe shifting, not selling positions, but just shifting your capital in a direction where you can find actual cash flow in companies. With that being said, guys, hopefully you guys did enjoy the video, and don't forget to subscribe, hit the like button, because it does help out us grow. And I just want to say thank you guys, and have a great week, and thanks for watching, and we'll see you in the next one. Bye.